What is up, team? It is Friday, September 27th, 2024. As you can see, I took a couple of trades today. Does this count as overtrading? A little bit. But overall, today's action was, I would say, probably a little sloppy. It was hard to really get into a good entry point. But if you looked at the higher time frame, you would have noticed that today's draw on liquidity would have been this level right here at 2188, which was the low right here, these relative equal lows from Thursday last week. So starting out on the higher time frame like we always do, I came in with a bullish bias overall. I was expecting price to move on up. I wanted a 10 a.m. close over this to be fully bullish and then have a target of this draw on liquidity up there. But because we failed to get that, we actually ended up getting like a liquidity grab here. I figured we were going to move on down. We were sitting within this 4-hour fair value gap right there, as well as this 4-hour fair value gap right here. I marked out that if we got a 4-hour close below that, we would see downside. And obviously the 10 a.m. candle, or the 6 to 10 a.m. candle, just kind of closed in between these 2 points. The following 10 to 2 o'clock candle also between these 2 points. Now in the PM session, we ended up getting a huge downturn, which was a good solid trade that you could have taken, and we'll look into how we could have gotten that. But overall, we were still bullish. When we're just looking at this to the left, this looked like it was bullish structure, right? We came up, created a swing high, a swing low, kind of consolidating a bit, and we were expecting price to move on up. We want price to continue heading towards these buy side liquidity levels that we have marked out. But unfortunately, we did not get that, right? So let's take a look at the 1-hour time frame. I was looking at that here too. I wanted to see this 1-hour fair value gap hold us to continue moving on higher. The one thing I did note, of course, was the fact that we did get a liquidity grab of the Asian session high. We tapped that in the pre-market and then started to sell off from there. The other thing that was keeping me bullish was the fact that we did have accumulation for Asia. We had manipulation down below the Asian session for London. And then I was expecting a distribution move on up. So that continued in my bullish bias. But of course, you have to be open-minded and find that invalidation point to say, yeah, it's actually not bullish. So ideally, I did want that 10 a.m. close over here, or at least some kind of hourly candle close, because that was a 4-hour fair value gap. It's also a 1-hour fair value gap. We were trading within that and holding down on it. So I wanted to see price just push above that to continue being bullish, because then at that point, I wouldn't expect this fair value gap to hold us. So let's move down to the 15-minute time frame now. Here is the AM session. As you can see, we had accumulation. Now we did have a move on up in the pre-market, taking out the London high, and like I said, taking out the Asian high. So that right there started to make me be a little weary of it potentially being bullish. This was not a good sign that price comes up here and we're wicking. But I still kept an open mind because we did have a 15-minute fair value gap here, another one here, and there was one more here. So very small ones, but regardless, these were in discount. So I would expect these to hold us. Obviously not this one so much, but at least these two. If we lose these, I would like to see a big on dump down into this draw on liquidity. Now, the reason why I said price was a little sloppy was we did lose that. Price comes down and it just starts wicking up and down here. We got to move down, boom, boom. And then here is where it stops. The draw on liquidity is right there. It stops here, comes back up, creates a higher low. Then we come and we sweep these relative equal highs before the dump down. So it took a little bit of patience. The ideal trade would have been this one, the one that I have marked out here, this 1 to 4 risk to reward. But let's get into what I actually did this morning. So remember, I came in with a bullish bias. At the open, we saw price accumulating here. Price then moved on down. After 9:30 open, we continued to move on down. And we created these 2 bearish fair value gaps. Now, I wanted it to go and become an inverted fair value gap to then take it long. Did I take this one? No. Why? I wanted this one to get inverted. I have been doing this where I have been, consistently taking the first fair value gap that I see right after 9:45 and have been getting stopped out on it. Granted, here I did not get stopped out on it. If I would have taken it, my entry would have been here, but the risk to reward was just not there for me. So I waited just a little bit longer to see what was going to happen. Here we get another bearish fair value gap. We did not take out that low, so that made me see that, okay, maybe that's a higher low that's going to get created. Started getting some strong pushes here. Once we got this 1 minute candle here at the news, it closed above that. I took a little bit and actually market ordered in right here at the second candle after that. Put my stop below this low. Price moves on up. I take some partials right here at the midpoint of this fair value gap, aligning with this high right there. And then putting my stop to break even. And as you can see, that got stopped out very quick. As soon as it pushed on up like that, it came right back down. So this was a quick scalp on my funded account, okay? That move was not what I expected, right? I was expecting bullish price action, but because we got this move on up so aggressively and then completely sold off right after, I decided to wait. I wanted to wait to see the 10 o'clock close. I wanted to see the 10:15, the 10:30. Overall, I wanted to see each 15-minute candle, how it was going to form. Now remember, there was a 15-minute fair value gap, so I have it so it's hiding on the lower time frames, but let's go to the 15-minute time frame here and actually turn that off, because this is the important one. Visibility on the lower time frames, and then this one too. Okay, let's go back to the 1 minute. All right, so 10:30. I wanted to see where 10:30 was going to open up. And as you can see, we get this massive displacement candle. We were looking like we were going to close above it. And then at 10:29, we get this massive push on down and we close below this 15-minute fair value gap. This right here, failing to displace above, looked like a liquidity grab. Came, started taking out lows, respecting bearish PD arrays, okay? Came down, had a bullish PD array, come on up. Boom, this gets disrespected on the second candle here. Once I saw that this right here, this bullish fair value gap got disrespected by this candle, plus the fact that the 15-minute candle closed below this 15-minute fair value gap, I took an order right there, pretty close to the open, put my stop above this high, and then I put my stops to break even once we tapped through this low. And as you can see, that got stopped out at break even. Frustrating, very frustrating to say the least. So let's actually mark that out here. And my target on it was the strong liquidity. Now that was a 1 to 2.3 risk to reward. And if I had held that trade, obviously I would not have gotten stopped out. It would have taken pretty much all day. Once I've gotten here and I put make break even, my break even, I don't think it would have gotten hit. Nope. It would have come so close to it, and then I would have gotten my full take profit on there. So overall, that was I had the right entry, but I was just so weary with the way price was moving. It was so wicky. ES was actually moving on more than NQ. So that also didn't add any kind of confidence to my trade today. So that's why I moved it to break even. So that was the first trade that I took. Good thinking, 15-minute candle close, etc., etc. Then I waited for 10:45 to see where that was going to land us, and that landed us pretty much right here at this 15-minute fair value gap. I waited for 11 o'clock to see where that was going to land us as well, and as you can see at 11, we closed below that second 15-minute fair value gap. So I took a couple of other trades on other accounts, not just this one. I took them on others. I was marking out trades here. You can see that the trade that I wanted to was the tap of this bearish fair value gap, and I actually had my stop above that high. That one too, once we displaced here, I took some off, and then I think I closed it out altogether just because price was just wicking all of this here. Then again, here I noted a bullish fair value gap get created, gets disrespected. I market order in right after that. I put my stop above the high. So here, continuously the same model. And here, I think I got stopped out at break even as well, right? So very frustrating action overall. It just keeps coming back up. And another thing was that we had this bearish fair value gap that got inversed, which then got revalidated somehow. And then price comes on up again, creates these two bullish fair value gaps. Again, another inverse fair value gap. I market ordered in on the next candle closure right there, stop above the high. I took some of my profit off here, as you can see, near the break even point, and this was what brought my account to green. In more of a green. I believe this trade was a loss. Yes, this trade I cut. Sorry, this trade I cut. I did not get stopped out at break even. I cut this trade overall because I saw that we invalidated this. Where was it? We invalidated something. I don't remember what exactly it was. So I didn't want to hold it thinking that we were going to get stopped out. So this made me red off of this scalp green, now red on the day. And then here, this trade break even. And then this trade put me in green. I took another two off here. And then this one got stopped out at break even, as you can see right there. Only for then to come on up here. And then of course, we get accumulation. A manipulative move on up, taking out buy side liquidity. You get a bearish fair value gap that gets invalidated. Then price just runs to our target. So this trade, do I have anything on there? No. Let me just put this back so you can take a look at the trade itself. Let's say you took this one right here, stop above that high. Draw on liquidity right there. That was a 1 to 3.36 risk to reward. So lots of trades, a lot of break evens in this chop right here. And then this one right here was the one that ultimately delivered the draw on liquidity that we had marked out from the morning. So yeah, today's trading day took a lot of patience, Definitely an easy day to get chopped up and stomped out. I mean, I had a lot of break-even trades. I had one losing trade right here. This one, quick scalp. This one losing. This one, break even. And this one was a W. And none of them hit my full take profit. The only one that did was this one right here. And I decided not to take it anymore because I was just so mentally exhausted. I saw it, but I was mentally exhausted at that point. I don't really like to trade PM session either, but it is what it is. If this week you lost, don't even beat yourself up for it, honestly. It was a tough week. Probably one of the toughest ones I've ever experienced in my 4+ years of trading. I'm very happy and fortunate to have come out green. So if you do have some green, or if you're very green, congratulations. That's awesome. If you're red, hey, the market was designed to make you super red. So if you didn't blow your account, consider that a W. So yeah, like I always say and send it off with, I hope you guys ended up green today. We ended green this week. Let's have a great weekend to just reset, start the new month next week. Obviously Monday's still September, but let's start the new month with a new positive mindset that we're going to come out green. So I will see you all next time. Peace.